I think the headline here is that you sold some of the stock. That probably comes as a surprise to many people, especially if you think the stock is still going to continue to rise from here. Why'd you sell it?
So I happen to own 1,115,000 shares personally. I haven't sold a single share, and I don't expect to for another 10 years. But for clients, I sold 27% of their stock, 25% of their stock. It was painful selling every single share, and I think we're going to make a triple in this company over the next 10 years.
What is up, you guys? This is Electric Invest, and today I have a brand new video. This time I am actually reacting to the news that just broke out from Barron, which is a billionaire that has been extremely vocal about Tesla, and he recently gave Tesla a target of $2,000 a share on an interview, which I'm gonna talk about later in the video. But today the headlines are running around that he sold 1.8 million shares, and I need to talk about this because I already know that some people are just gonna read the headlines and get all emotional about Tesla without considering the details and what's happening here. And I'm going to be giving my input whenever I see fit. And if this is your first time watching the channel and you haven't subscribed already, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next video. And with that being said, guys, let's begin.
Why don't we start off talking about Tesla, because there have been a lot of changes at the company just in terms of what they're doing with Bitcoin and other things, and we've seen that stock really skyrocket before coming back just a little bit. What do you think? What do you see as somebody who's been in this for a very long time?
So we've been in Tesla since 2014. We started working on it in 2012, 14 to 16. We bought stock, invested $387 million. And that was 1.6% of our assets. It became worth $5.5 billion over about a month ago. Now it's worth $4.5 billion. In the past 6 months, we've sold about 1.7 million out of our 8 million shares that we held. And we sold them between $450 and $900 a share, average $660, $670. And so we still own 75% of our stock. I'm hopeful we hold that for a very long, actually more than 75%. I'm hopeful that we can hold that for a number of years. I think that in 10 years, our target is $2,000 a share. And I think that could be light by maybe $500 or $1,000 a share. So
I'm going to take a pause right there. And like he said, you know, over the past 6 months, they've been selling approximately 1.8 million shares for his clients. But the thing about it is that in his firm, for his clients, he bought Tesla shares all the way back from 2014 and 2016 at an average cost of $317.8 million. And now it has ballooned to $3.3 billion. So that is like, what, a 20x increase? Obviously, this is not something that he can continue to do, because when it comes to firms, just like ARK Invest, sometimes from time to time ends up selling some shares. So ARK K from ARK Invest, you know, the ETF from Cathie Wood, is the one that holds the biggest portion of Tesla at around, give or take, 10% from time to time. And ARK Invest actually does sell some Tesla shares all the time, you know, just to mitigate the risk and make sure that their portfolio doesn't hold more than around 10%. Because if they were to buy Tesla, let's say at $100 a share, and then it balloons to $1,000, that's a 10x increase. And then all of a sudden, they don't have 10%, they have a higher amount. And it's putting way too much weight on the fund. So for obvious reasons, we have to understand the difference here between selling stock and risk management. And that's what's happening here. So I just wanted to say that real quick, but let's continue.
when we started talking with you about this in 2014, when we were buying the stock, I told you that I thought that we would make at least 20 times our money. We have made 20 times. We've now made 15 or 16 times our money. I think there's another triple to go. When we were doing that, you were telling me you were skeptical. Most of my friends were skeptical. Most of my investors were, everyone was skeptical. But we persisted. And at the time we invested, it was unlikely, in most people's opinion, that electric cars were going to dominate. Now, of course, even General Motors says that by 2035, they're going to have an all-electric fleet. So it's going in this direction, and Tesla is the leader. What's interesting about
Ron,
this company?
real quickly.
Why is it interesting?
Can I just ask? Well, I definitely want to hear that, but I think the headline here is that you sold some of the stock. That probably comes as a surprise to many people, especially if you think the stock is still going to continue to rise from here. Why'd you sell it?
You cannot be the mainstream media without them having a little bit of comebacks. Hey, but wait. You sold the stock. I mean, if you think it's going to continue to skyrocket, why do you sell it? And I just thought it was so funny when he was drinking. He's like, he already knew. He was getting prepared. Like, oh my God, here we go again. Because you can see he was even sad about it. And he's going to be talking a little bit about that. But I'm sorry, guys. I just wanted to comment on that. It's just,
because it was up 20 times. And it became a very large percentage of some accounts. So I happen to own 1,115,000 shares personally. I haven't sold a single share, and I don't expect to for another 10 years. But for clients, I sold 27% of their stock, 25% of their stock. And I said that, and I told Elon that I was the last in. I bought it for all my clients first. And I said I was in 2016 when I was totally filled on the accounts that I could buy for at our firm, and I couldn't convince other people to buy more. Then I invested for my firm in this company, and I think I'm going to hold it another 10 years at least. And I told Elon that I would be the last out, and the reason we sold was a risk management idea where it became a very large percentage of two funds that I manage, two focused funds that I manage, became over 50% of those funds' assets. And I thought that risk mitigation was appropriate. And at the same time, one of those funds, Barron Partners Fund, it was $2.8 billion 3 years ago in assets. And it has a $1 billion line of credit, and we had employed $750 million. And when it went up sharply, I thought that it was appropriate to reduce the risk of this portfolio, to bring down that as a percentage of the fund, and at the same time to pay off all the debt. So we went from $750 million of borrowings to less than $100 million, and reduced the position in the account from over 5 million shares to 4 million one. It was painful selling every single share, since I think we're going to make, my hurdle is to buy a stock. We're trying to invest and make 50% over 3 or 4 years, and double in 5 or 6 years. And I think we're going to make a triple in this company.
He knew that Tesla was going to skyrocket, but he himself didn't anticipate how much it was going to skyrocket. He was one of those people, obviously, back in 2014, that he believed that Tesla was going to be one of those amazing stories, and it was, and it has been, and it definitely has still a long way to go. But luckily, he did invest in himself. He did buy shares for himself. And those shares he hasn't sold at all.
Their prospects are brighter than they've ever been. I think it's much more likely they'll be able to go from 500,000 cars a year to 20 million. It's much easier to do that than to go from 0 to 500,000 cars.
He's referring to the fact that obviously economies of scale matters. Tesla will obviously have an easier time to continue to build more cars as production continues to go up, because the more cars they sell, the more they can sell at a profit from those vehicles. I know that a lot of bears have said that Tesla doesn't make a profit because they only use regulatory credits, but the reality is that Tesla has amazing margins, up to 30%. Obviously, the demand for the batteries are going to continue to increase. Suppliers are going to continue to push those batteries, and Tesla is going to have a much easier time to continue to scale because of the economies of scale and how things get cheaper the more you continue to produce goods. And that is in accordance with Wright's law.
We've done the modeling using something called Wright's law. It's a derivation of Moore's law. So we think that battery costs are declining such that by 2022, a mass market EV will be cheaper than a gas-powered car. Once that sticker price changes, you get a massive uptick in demand. We don't see demand being an issue at all for the company. And that cost equation will also help Tesla's margins.
So I just wanted to comment on that because it is easier for Tesla from now on to continue to increase than it was from the beginning. Everybody knows that in the beginning you start very, very slow, very, very tiny. Nobody believes in you. Oh my God, you're not gonna make it. And then as soon as you get some traction, and batteries start to go down in cost, and you start to figure out how you're going to be supplying and the materials and obviously the manufacturing, I mean, it's game over. You got it.
So I don't want to spend all the time in Tesla, but let me just give a couple things. That number one, I think that, so Elon has said that the autonomous driving, which he believes is going to be effective by the end of the year, he thinks that alone is going to be worth $500 billion to $1 trillion in 10 years, just the autonomous driving feature. And that's good. It's going to be a subscription business. My guess is, right now you buy a car, it costs you $10,000 to have autonomous driving. And at some point, I think that you'll probably pay $100 a month and there'll be 20 million cars a year sold, I hope, and all the cars that had been sold before. It could be in 10 years, it could be a $40 billion a year revenue business, growing very rapidly because you're going to be adding more cars. There's a billion cars that you have to replace ultimately with electric cars. So he's got a really big runway in front of him, and this is going to be a highly valued business. That's one. So that alone is worth the present price of the stock in 10 years. In addition to that, you're going to get a business in Tesla that I think could be doing $600 billion a year of revenues and making $200 billion a year of gross profit. You get that for free. A battery business that could be doing just about as much in revenues and a little bit less in profits. You get that for free. An insurance business, you get that for free. You get a rideshare business, you get that for free. You get the solar roof business, you get that for free. So the opportunity here, when I'm describing $2,000 as a target price in 10 years, I think it could actually be more than that.
You get that for free, you get the insurance for free, you get the solar for free. Basically what he means is that obviously when you invest in Tesla today, you get those things for free because of the tremendous revenue, $600 billion valuation on the self-driving robotaxi network. And he did mention, I don't know if you guys caught it, you buy the car for $10,000 and then you pay $100 a month for the subscription service on the full self-driving, which is something that I basically pointed out that was a big deal and some people seem not to get it and understand. That is a point that is actually something that I've been thinking about because obviously as the software continues to get more expensive and more sophisticated, the hardware, which is the vehicle part, continues to get lowered in price. And Tesla will definitely be profiting a lot more from the software than they will from the hardware. Once we get to the point that full self-driving becomes a reality, 100%, outright buying the Tesla is not going to be as important to Tesla as hooking the customer to the software. The Tesla car is going to be the excuse to then get the revenue from the software, which is the bigger deal here. And he was going on obviously on the solar, the insurance, everything that you get with Tesla. And this is just one of those things that it's a tremendously high growth company and you get all those things for free if you invest today, because he's still giving Tesla a $2,000 price target in the next 10 years. And he believes that it could definitely be more than that. He says that Tesla is going to double and triple. But what do you guys think about this? I wanted to make this video because I didn't want you guys to be reading the headlines and potentially not being able to understand what's happening. I know a lot of other articles are going to be picking up that headline, he's sold. It's all about risk management. He's still giving Tesla a tremendously great upside. If you have diamond hands, obviously in the companies that you have the biggest convictions on, you're not going to sell. And if you found this video helpful in any way, shape or form, and you haven't subscribed already, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next video. And I'll see you guys next time.